When you think of coal, the first thing that comes to your mind is probably an image of dirty, outdated power plants, right? In today's world, coal is one of the most vilified industries, with governments pushing hard for renewables and most investors subsequently running to the nearest clean energy stock. But here's a contrarian take. Coal is still critical to global energy production, and it might just be the best kept secret in the investment world right now. With 30% of the world's electricity still coming from coal, emerging economies growing at breakneck speeds, and the West sleepwalking through its own energy crisis, coal is far from dead. In fact, it's poised to be one of the most lucrative investment opportunities for those who can see past the headlines. Let's dig into why coal's role is indispensable, how supply shortages are creating a massive opportunity, and why investors willing to take a bet on this hated sector could be sitting on a goldmine. This video is produced by the team at Capitalist Exploits. Headed by professional asset managers Chris McIntosh and Brad McFadden, the team hunts for deep value assets that are surprisingly contrarian despite strong fundamental cases for potential future appreciation. If you're looking to gain access and insight as to the personal investments of active hedge fund managers and in-depth reasoning as to why they've invested in the assets they're sharing, check the links in the description below. You'll get access to advice on how to allocate, organize, and think about your portfolio, while joining a growing community of people thinking outside of the box. Enjoy monthly updates, open Q&As, regular newsletters, a community forum, organized portfolios, investing education videos, and more with the Capitalist Exploits Insider subscription. If you're not ready to fully take the leap, we also offer the Capitalist Exploits Insider newsletter series for $1 for the first 30 days and $35 a month thereafter. Do note, our investing strategy and philosophy can deviate a lot from the mainstream. We offer a money-back guarantee regardless, but make sure you're on board with our investing philosophy and global outlook before deciding to join us. Let's start with the reality check. Coal is irreplaceable. While the world talks about the future of clean energy, coal continues to play a foundational role not just in electricity, but in global industrial processes. It's easy to overlook this when the narrative is dominated by wind turbines and solar panels, but the truth is, coal's reach extends far beyond the grid. In electricity production, thermal coal is responsible for roughly 40% of the world's power generation. And it's not just developing nations that depend on coal. China and India, two of the fastest growing economies, rely heavily on it. Why? Because coal provides consistent, reliable baseload power, something that wind and solar simply can't match. The problem with renewables is their intermittency. The sun doesn't always shine and the wind doesn't always blow. Coal, on the other hand, delivers 24/7 energy regardless of the weather. But electricity is just part of the picture. Metallurgical coal, or coking coal, is essential for steel production. There's no substitute for it in the process of turning iron ore into steel, a material the modern world can't function without. Even if steel recycling through electric arc furnaces is an option, it still requires enormous amounts of electricity, often generated by coal. Beyond steel, coal is critical for other industries like cement production and hydrogen manufacturing. That's right. While hydrogen is often praised as a future green energy source, China, the world's largest hydrogen producer, relies on coal to produce it. Coal is also used in carbon fiber production, silicon for solar panels, and activated carbon, which are crucial for industries we associate with renewable technologies. In short, even the industries looking to move away from coal are still, ironically, deeply connected to it. Now, if coal is so indispensable, why is everyone abandoning it? Simple. Many believe coal's days are numbered, but that couldn't be further from the truth, especially in emerging markets. Let's take a closer look at why coal demand is actually rising, not falling, in key regions. While the West is racing to build wind farms and install solar panels, Asia is doubling down on coal. China and India are already the world's biggest consumers of coal, and they're not slowing down. In 2021, China experienced its largest energy consumption increase in a decade, with coal usage up by 4.6%. This growth is directly tied to economic expansion, industrialization, and the rising living standards of their populations. For these nations, coal is more than just an energy source. It's the foundation for economic growth. These countries aren't going to sacrifice their development goals for the sake of reducing emissions, especially when renewables are still too expensive and logistically challenging for their needs. Coal is cheap, reliable, and readily available, three things that wind and solar can't provide at the scale needed in countries like India, China, Indonesia, and Vietnam, just to name a few. In this, we thus stumble on a major critique of the global energy transition narrative. It assumes that developing nations will cap or reduce coal usage in favor of renewables. This is one of the biggest misconceptions about the global energy landscape. In reality, these countries are prioritizing economic growth and energy security over environmental concerns. To them, coal isn't an outdated relic, it's an economic lifeline. The focus is on lifting millions out of poverty, growing industries, and creating jobs, all of which require cheap and reliable energy, something coal delivers better than any renewable source at this stage of development. The idea that renewables will replace coal in these regions is also complicated by the high costs of building the necessary infrastructure and the rising cost of raw materials like silicon, which is crucial for solar panels. Until these issues are resolved, coal will continue to be the most cost-effective and scalable solution for the foreseeable future. So, while coal demand is rising, you'd think coal companies would be scrambling to expand, right? Well, that's not exactly the case. In fact, coal supply is shrinking, and this is where things get really interesting for investors. The global coal industry is facing a paradox: rising demand but constrained supply. And it's not because there isn't enough coal in the ground, it's because the industry has been starved of investment. The reason? Environmental regulations and ESG pressures. Coal has become a dirty word, not just in environmental circles, but in financial markets as well. Major banks and financial institutions are increasingly refusing to fund new coal projects. This has led to severe underinvestment in coal mining operations, and as older mines are being exhausted, new mines aren't being developed fast enough to replace them. The result is a tightening of global coal supply, especially in Asia, where demand continues to surge. This constrained supply has created a competitive moat around existing coal producers. With fewer new entrants in the market, the companies that remain are seeing higher returns on equity and steady cash flows. This mirrors what happened in the tobacco industry. After regulatory pressures scared off new competition, existing tobacco companies thrived, enjoying outsized profits as demand remained resilient. Similarly, coal companies are benefiting from the fact that the barriers to entry in the coal industry are now sky high. With banks unwilling to lend and new mines facing regulatory hurdles, existing players are in a prime position to profit. Coal stocks are trading as if the industry is on its last legs, but the reality couldn't be more different. Coal demand is growing and supply is constrained. That's a recipe for rising prices and big profits for coal producers. Yet, the market is pricing coal companies at rock-bottom valuations. The market is missing the long-term profitability of coal miners. Many of these companies are sitting on strong cash flows, but are being ignored by mainstream investors due to the stigma surrounding coal. For investors willing to look past the ESG narrative, coal stocks present a tremendous opportunity. One of the best parts? Dividends. Many coal companies, particularly in the US and Australia, are paying substantial dividends, with some even offering double-digit yields. Even if coal stocks remain undervalued for a while, investors can still enjoy steady returns through dividends. Coal companies are generating massive free cash flow thanks to elevated coal prices and tight supply. This allows them to reward shareholders handsomely, making coal an attractive income play for contrarian investors. If you're interested in understanding how to find good companies in the space and ensure they have solid foundations, check out our video here from Lucas at the Capitalist Exploits team. So, where does that leave us? If coal is so essential, demand is rising, and stocks are undervalued, what's the final takeaway for investors? The bottom line is this: coal is one of the most hated investments in the Western world, but that's precisely why it might be one of the most promising contrarian plays right now. In the world of investing, some of the best opportunities come from sectors that everyone else is overlooking, and coal fits that description perfectly. While it's been written off by many as dirty and obsolete, those who are willing to look beyond the negative headlines are seeing an industry that is undervalued, misunderstood, and set to grow. Let's be clear, coal companies are trading at extremely low valuations. Mainstream investors, influenced by ESG pressures and the global shift toward renewables, are steering clear of coal stocks. But that mass avoidance has led to a situation where coal stocks are priced as if they're on the verge of collapse, while in reality, coal demand remains strong and is actually growing, especially in emerging markets like China, India, and Southeast Asia. These nations rely heavily on coal for industrial growth, electricity generation, and economic expansion. As global demand rises and supply remains constrained, coal prices are set to climb, driving higher profitability for the miners still operating in this space. For investors who can recognize this opportunity, coal offers not just undervalued assets, but also significant dividend potential. As we mentioned, many coal companies, particularly in the US and Australia, are generating massive free cash flow and paying out substantial dividends. In fact, some of these companies are offering double-digit dividend yields. This makes coal not only a potential capital appreciation play, but also a solid income investment for those looking for steady returns in a volatile market. The long-term thesis is clear. Despite the global push for renewables, coal will remain a key part of the energy mix for decades to come, especially in developing economies that need affordable, reliable energy. As supply tightens due to underinvestment and ESG pressures, coal prices are likely to remain elevated, which will benefit investors who are in it for the long haul. This isn't about chasing short-term gains. Coal represents a long-term investment opportunity in a sector that's been undervalued, overlooked, and misunderstood. Those who can see past the political and environmental pressures to focus on the fundamentals, supply, demand, and profitability, are well positioned to benefit from coal's inevitable rebound. For contrarian investors, coal may just be one of the most promising opportunities in the market today. So, while coal may be one of the most hated sectors in the Western world, the fundamentals tell a different story. If you're looking for an investment that's under the radar with strong cash flows and high dividends, coal just might be the hidden gem you've been searching for. Coal is one of the many themes or portfolios that we have organized in the Capitalist Exploits Insider Members section. To gain access to the specific companies we're looking at, and even more in-depth rationale about coal and many other sectors, check out the links in the description below. The research used in this video is also available in the description, and thank you so much for watching, and remember to stay informed.